This is our Forex blog for February 6, 2013. I didn't have time yesterday to do yesterday's blog, but what you can see is our easiest way to trade is using our new indexes. We create these synthetic indexes by comparing the dollar to every other pair, and of course the currency meter can sit underneath it, which adds to your probability and basically lets you see what the trend is of every pair. And if one pair is going up, like the dollar, you want to find a currency that's weak during that time to either buy or sell the dollar against. Now the pound, which you can see underneath it, is also above its hourly moving average, for the most part above its 15-minute moving average, so you wouldn't want to buy two currencies that are both strong. Let's scroll this one back and you can see the euro broke down from above to below its hourly moving average, and again here at 2, and that is pretty much a no-brainer one to be trading the dollar against. The euro's weak, the dollar's strong, so you sell the euro dollar. And that's how easy I've made trading. This is by far the best tool we have, and it's just ridiculously easy to trade with it. 2 o'clock, we're looking for euro dollar sales, and guess what? It falls from 35.60 down to 15. 10 pips a day doubles your account every 2 months using very tiny amount of leverage, 1 or 2% risk per trade. So basically you've hit your daily goal right here. If you hang on to here, you got 2 days worth of profit. If you hang on to here, you got 3 days. Almost half a week's worth of profit in less than 20 minutes. The dollar was strong, the euro was weak. Now it gets even easier when you trade a currency that's weak on all time frames. Here is the Australian, and you can see the daily, weekly, monthly trend is down. At 2 o'clock it broke from above to below its previous day's low, and then it came right back above it. So if you basically were taking an Australian dollar sell right here, as soon as it goes back above this area here, you probably would exit your trade. When it comes back up and it fails to get above the high, you might consider selling it again a little bit before 3. Let's take a look at the Australian dollar to show you how these indexes not only can help you find good trades like in the euro dollar that just went your way, but also how to get out of trades that don't work so well. 2 o'clock. Let's say you got short right here, it's kind of going sideways. You put your stop above the high, and again, like I just showed you, a little bit before 3, the trend really started to go, and this one took off. So if you took a trade in that, maybe you lost 10. Actually, the difference between this and this is 5 pips. You would have lost 5-6 pips. You go short again. Let's say when it breaks the low here at 33, you're out somewhere up in here. Guess what? You lost 5 pips. Then you made 15. You netted 10 on 2 trades, and that's the beautiful thing about this. Support resistance areas also work with these pairs. For instance, the pound. You can spot double tops, and in this case triple tops, and this is the point of control. This is where most traders have positions in all the pound pairs as of yesterday. It's a major resistance area, and because the weekly and monthly trend is down, this one's doing a counter trend trade up. When it does a double top right here at 6, good place to sell the pound. Now which one would you be looking to sell it against? Well, the dollar was trending up and it pulled back, found support here at the 15-minute moving average. So it clearly makes sense that at about 6 o'clock you're looking for a pound dollar sell. And guess what? It's not the best trade in the world, but it falls from 56.75 all the way down to 47. It's over a 25 pip drop, and it's not really that clean of a trade, but it becomes even easier when you have something like a range chart up, which shows, in this case, 5 pips per bar. You can basically sell once the price goes underneath the previous bar's low. It would have been short a little bit after 6. Your stop's, sorry about that, your stop's right above the high. Kind of goes your way and comes back. You move your stop, above that area here. You tighten your stop, and you might get out of your first trade with 5-6 pips. You got a little bit of a pullback here. You go short again at 64. You're out here at 54. So you made 5 pips on the first one, 10 pips on the second one, 15 pips. And that's just one of many different ways of using this. You can also draw trend lines on this. So basically when a currency is trending up and especially when it failed to make a higher high here, breaks the trend line a little bit later at 9. Which currency is either strong at 9 or is going from a downtrend to an uptrend at 9? Well, guess what? Let's take a look at some of the other pairs. Here's the CAD. I'm going to bring it over. $9 This one has a daily, weekly, monthly trend that's up. It did just break from above to below its hourly moving average, but you can clearly see the intensity of the downtrend is kind of less. So when it breaks out to the upside right here around 9:30, you would want to buy the CAD, and the dollar is very likely to be going down now. So the dollar CAD makes a good one to be selling. Let's bring that up over here. Right around 9, we're looking for a dollar CAD sell. And again, look at how pretty much effortless this trade is. I mean, it breaks down, kind of comes back up. Your original stop, I like to have super tight stops. My average loss is about a little bit less than 7 pips. It goes your way, comes back up, starts to go down again. I'm moving my stop almost to break even here. And, this is not my favorite pair to trade, so I'm going to draw my fibs on there and usually get out somewhere between the first and second fib target. You can see it only went a few pips underneath that without pulling back. So we would have been short here at 77, out at 60. 17 pip move in less than an hour. And again, before using the currency meter, you wouldn't know that a trend line just got broken, or you wouldn't know that a double top's formed or a double bottom, or the index, all the dollar pairs are stronger today than they were at their strongest point yesterday. That's what the dotted green line is, previous day's high. But you do know that now. And just one last example here. The Australian's trending down, comes back up to the hourly moving average here, which is a great resistance area to get short. It's got the previous day's low right above it. Good place to be selling the Australian. Now, most people don't trade the Australian CAD, but we know the CAD was strong. The Australian's weak, and that's right at a little bit before 8. So the Australian CAD right before 8 makes a very high probability one to be selling. And guess what? Look at the beauty of timing this together. You could just draw a trend line underneath there, and you're already aware of it a little bit before 8. 5-10 minutes past 8, it breaks down. It goes from 93 all the way down to 82. Rallies back up, you get short again, and you can see it falls 10-20 pips. There's so many ways to trade with these indexes. All the patterns that work, double tops, double bottoms, triple tops, triple bottoms, trend lines, wedge patterns, previous breakouts over the previous day's high, breakdowns underneath the previous day's low, pullbacks to the moving averages such as the hourly and the green ones, the 15-minute, and also the point of control, which you can see from our pound example was the high all day. And you also had a trend line break with this one a little bit later too, right? A little bit after 9. So the pound after 9 was very likely to go down. The longer term trend of it was down. And let's bring up the pound CAD. A little bit after 9, boom, look, 10, 20, 30, 40, 50 pips. It's not much else to say. This is the easiest way of trading we've ever come up with, and our trading volume has already in the last 2 weeks gone up about 50% because people are trading well with this tool, and obviously instead of trading micro lots and mini lots, you're trading full lots all of a sudden for in many cases. So take a look at this tool, and you can get our software for free by opening a live account with FXDD, FXCM, Forex.com, or Alpari through our website, leveragefx.com.